Welcome to the Invest In podcast, the show where we help you learn how to make more money through real estate and other passive investments. We're your hosts, Zac Hoyt and Eric Richner, entrepreneurs, investors, and the guys behind Maverick Asher Capital. Whether you're a seasoned investor or just getting started, buckle up because we're taking you on a journey to help you achieve the lifestyle of your dreams.
Now, let's hit the road.
Welcome back to the Invest In podcast, where we uncover tons of ways to achieve the life of your dreams through investing, RV parks, and of course, mindset. I'm your host, Zac Hoyt, and today's episode couldn't be more timely. With the 2025 market going sideways, you've got tariffs, inflation, recession whispers getting louder and louder. We're talking with someone right now who's on the front lines of wealth management every single day. My guest today is, we're going to call him Bob, from a seasoned and trusted financial advisor who works for a very well-known financial institution. And he's helping high net worth clients navigate exactly what we're all feeling right now, which is uncertainty, right? So whether you're an RV park owner trying to preserve cash flow, a passive investor looking for safety outside the stock market, or just someone who's just starting out into your journey in real estate, we're going to do a deep dive into where smart money is moving, how to shift your mindset in times of fear, and why alternative assets like RV parks are finally getting the spotlight they deserve. So buckle up and get ready to take some notes. This is going to be a real powerful one. Without further ado, I'd like to welcome Bob to the stage. Hey, Bob.
Thank you very much, Zac. It's a pleasure to be here.
Awesome. Love it. Yeah. So with this market right now, 2025, it's going crazy. We've got these tariffs, the inflation, and it seems like recession talks for a while. Can you just give us a quick breakdown of what's happening out there?
Yes. And it comes down to the markets don't like to deal with uncertainty. You know, one day Trump says something and markets, gyrate depending on what he says. And then he changes his mind and they go the other way. So it's uncertainty that's driving this kind of volatility because people aren't sure what policy is. Policy keeps on changing. When you have uncertainty, people pull in their horns. So that's what you're seeing with markets. That's why you're seeing these fluctuations.
Yeah, because these markets, they're always banking on the future of what's going to happen. They're always positioning and pricing everything for the next year and beyond. Without certainty, what do? Right?
Exactly. And again, when you invest in the markets, there are two axioms I go by, which is you don't fight the Fed and you don't fight the tape. Okay. And what the actions that the Fed take are one thing, and what the president wants them to do is another. Now, every president wants low interest rates because low interest rates is good for the economy. In your business, you have people who take out mortgages or loans or whatever. They want low interest rates. When rates are high, they're not buying. When rates are high, corporations have to borrow at higher costs. That hurts the economy. So I haven't seen a president who doesn't want low interest rates. And that's why you see Trump, beating up on Powell.
Yeah, they're not buddies. I know that for sure. Many times Trump has said that he's going to get rid of Powell or try to get rid of Powell and the whole everything associated with that. He just wants ultimate control. But you don't even know what he wants from day to day.
That's the uncertainty. That's
the uncertainty.
And that's the volatility. And there's an index called the VIX index. Volatility Index, VIX, and it's a contrary indicator. So when things are quiet, the VIX will be trading at 13, 14. But when things go nuts, like they did a couple of weeks ago, they went up as high as 60. And contrary to what people think, that's when you buy.
Okay.
So I was going to say, so if you think of Buffett, his maxim is, be fearful when others are greedy and be greedy when others are fearful. So it's a contrary indicator.
Yeah, I like that. And so that's perfect. That's the first thing that I'd love to touch on is that mindset that people should be having. So since there is a lot of fear right now with all that volatility that you're talking about, everything that we mentioned, tariffs, recession, all of that, as a financial advisor, like how do you keep your clients to separate their emotions? How do you help them separate their emotions from decision making?
Well, I try to remind them that we're in it for the long term. Because I started as a broker with E.F. Hutton in 1983. It's a name you may not be familiar with. And at that time, the Dow was less than 1,000. And during that time period, we had the crash of 87 when I was a broker. You had the S&L crisis. You had the internet bubble. You had 9/11. You had the financial crisis. You had COVID. And we're at over 40,000 with all that. So you have to keep in mind that over the long term, that's how you make money. And if you remember Rudyard Kipling, if you can,
love Rudyard.
Right, if you can keep your head while others are losing theirs, that's the point. You have to learn how to control your emotions, and it's not, believe me. And the way I look at the market is very, very simple human psychology. Markets are based on fear and greed. Fear is a bigger emotion than greed. That's why markets come down quicker than they go up. So I like to say the markets go up on an escalator and come down on an elevator. And when I have people telling me they can't take the pain, that's when I know it's time to buy.
Okay. All right. Yeah. So you've got your ear to the ground to all these different people, of course, and as they're panicking.
Absolutely. In an environment like this, well, here, Rule 405 in the SEC is know your client. So that's how you have to invest. What makes your client sleep at night? What are they looking for? Are they looking for income? Are they looking to put their kids through college? Are they looking for retirement? Are they looking to grow their wealth? Only you could tell me as an individual. And that's how we try to invest.
That makes sense. Yeah, absolutely. Similar conversations I end up having with people. And it's a foundation for what are your goals, right? And aligning.
And I'll tell people, I can have the best idea in the world. If you're not comfortable, don't do it. Okay. If we buy something and you can't sleep at night, sell it the next day.
Yeah. Yeah. And I think I was mentioning on a previous podcast, one of the reasons why I love RV parks or just real estate in general is it's very predictable. The things that we buy are very predictable and they go up over time and they track with inflation and all of that. And one of my friends got me into crypto and all of that, right? And holy smokes, the volatility in that, it was just a little bit at first. And then I just put enough thousands in there that it made me care a little bit more. And yeah, I find myself checking my phone before I go to bed, checking when I wake up, checking like when something's happened. I'm like, what am I doing? This is why I didn't get into this. And I pulled my money out of these things is because I just like knowing and having that predictable type of income and that type of asset that's consistent.
I understand. So when it comes to crypto, if you want to me, it's gambling. Okay.
It's how it feels.
Think of crypto as a commodity. So if you want to put some money in, you don't put in more than maybe 2-3% of your assets into that. And this happened with my older daughter. We were overseas and we were talking about she had an investment in crypto and she said she doubled her money. My advice to her was take out your original investment. Now you're playing with house money.
Yeah. Yeah. There you go. Absolutely. Yeah. And I am not a gambler, by the way. I'm not a person that likes to go to Vegas for any of that. I do not do that. But I love real estate. So when you know something and you feel like you understand what's going on, it's not a gamble as much at that point, right?
But again, I'm sure there are fluctuations in that market.
Sure.
Okay.
For sure.
But you do have a long-term time period. And if you've been down this road before, these things will pass over time,
right,
provided that whatever you're buying is legitimate and not that risky and so on and so forth. So what I've been doing for a number of clients now, I've been buying 3-month treasuries.
Okay.
Those
Yeah.
They're getting 4%. You don't have interest rate risk because if the Fed raises rates, they won't go down because it's only 3 months. And we just keep on moving them.
It's a predictable set it and like let's see. But while we're waiting for all this volatility,
you can sleep at night. Because if the treasuries aren't worth anything, nothing you own is worth anything.
Yeah. So besides treasuries, where are you seeing some of your more savvy or even conservative clients reallocating their capital right now?
There's a difference between savvy and conservative.
I get it.
Okay. I'm not being facetious.
No, I get it.
So for people who are savvy, and I have people who are executives in tech companies, whatever, what I say is you have to invest in the future. So what's the future? AI is the future, right? Let's see. Quantum computing is the future.
Yeah.
Medicine, advances in medicine is the future.
We need it.
So how do you invest in those assets? That's for the savvy investor. For people, and again, a lot depends on, there's so many factors involved. And, like I said, rule 405, know your customer. How much risk are they willing to take? When do they need the money? So on and so forth. So for more conservative investors, I'll buy tax-free municipal bonds. But the bonds, the way I buy bonds, they're very conservative. One, they have to be double A underlying. They're not insured, because we found out in 2008, insurance is only as good as insurance company.
Mm-hmm.
Okay, they have to be for essential services. What do I mean? Schools, building fire departments, police forces, things like that, water and sewer. In 43 years, I've never had a default. And they pays predictable income every 6 months, tax-free income. So if you're in a high tax bracket, 4% could be 6.5%, 7%. So that's another way that I invest.
Yeah, no, wonderful advice. Absolutely, all around. I love that. What are some of the biggest mistakes that you see investors doing in these turbulent times like this?
They're buying company, and again, I was taught valuations when I started in the business at Hutton. Okay, so tech companies should sell at 30 times earnings. Okay, so I look at someone like Meta, it's 24 times earnings. That to me is a value. Other stocks are only at 100 times earnings. That's a gamble. Okay. Car companies should sell at less than 10 times earnings. Pharmaceuticals should sell 18 to 22 times earnings. Asset managers, 15 times earnings. So I look at value on that basis. Also, the other thing that's important is who's running the company. I have a philosophy. Winners always find a way to win. Okay. Whether it's Michael Jordan or Tom Brady or Pat Mahomes. And the same is true with CEOs. Jamie Dimon always finds a way to win. Whatever company he's involved with does well. Brian Nichol, who's just made the head of Starbucks. Look what he did with Chipotle. Look what he did, with Taco Bell. So that's what you look for.
I love that. Winners always find a way to win.
It's true in life.
Absolutely. It really is. It really is.
And you as an individual have to find a way to win.
Absolutely. Right. Yeah. And I am a firm believer that, personally, I have a very strong loci of control, meaning that I am a firm believer that I'm in control of everything that I do, the good, the bad. I'm responsible for all of those things. And so by golly, I can attract whatever I need to win at the end of the day. Right. Not at any cost, but just, through my values and everything like that.
Yeah. The only security you have is right here. That's your security. Yeah. And I've always taught my kids, the game of life is played between your shoulders. If you're happy, you're right. If you're unhappy, you're right.
Yeah. Yeah. Whether you think you can or you can't, you're right.
Yes.
Yeah. Similar type of, mantras. I get it. Oh, man. So from an advisor standpoint, you mentioned like, all right, your daughter, you make it to 2 to 3% that you might say to put into crypto market as an allocation. What could be some general rule that people should have in real estate or RV parks? What role should that play in their portfolio?
First of all, you have to see who's behind it.
Of course, always.
All right, because if you're investing with the wrong person, Bernie Madoff.
Yeah, for sure.
Then you got to see what backs these parks. You have to find out what's the valuation if you're buying them cheap.
Yeah, you always make money when you buy. You just realize it when you sell or refinance, do whatever. But
But again, you have to buy right. And that's true in any asset class, whatever it is, whether it's stocks, real estate. I mean, you know, and that's where, what Warren Buffett, that's Buffett. He's a value investor. If you ever read The Intelligent Investor, this book that was written by Buffett's teacher at Columbia, and it talks about value investing, and that's where Buffett, that's who he followed. That's the mantra you follow. So what's something worth? What someone's willing to pay for it. But if you could recognize that you could buy something, an asset at 50 cents on the dollar, you won't go wrong. You don't have much.
Yeah. Absolutely right. And so it's really looking at that value add potential. It's looking at the history that this asset has done, whatever that asset is. And then for us in real estate, we have some control. It's a little different than buying a stock that we have to watch what happens and try and get the inside track. To me, whatever, that's your profession more. You're looking at all your indicators and reading the news and understanding the tea leaves and how one thing is related to the other. For me, I can directly benefit. Like an RV park, I can double the amount of units that it has by just digging some pads, putting some utilities in there, and then driving traffic there to this place that people want to spend time. So I have some control.
I was going to say, but one thing you have to check is, what's underneath the land. Is it toxic? Is it not? I mean, that's
for sure.
So it comes down to doing really what it comes down to, and this is true in any investment, doing your homework.
Yes.
You have to do your homework. And here's a mistake people make. They're not buying stocks. They're buying companies.
Mm-hmm.
People think they're buying stocks. They're not. They're buying companies. They're investing in a company. So they could be investing in an IBM. They could be investing in a JP Morgan. What's the company like? Who's the management? What's their prospects? I mean, and the same thing with, you're investing in an RV park. What's the potential gain? What are the pitfalls? So on and so forth.
Yeah, you're spot on in saying all those things. Doing your due diligence. If you're buying an RV park or real estate or anything, you got to do lots of due diligence, got to do your homework. And if you're investing in someone who is that general partner who's doing those things, that operator, you got to do your due diligence on them and the team and everything that goes behind them. Yeah.
Absolutely. Yeah, you don't want to be investing with Bernie Madoff.
No, absolutely not. And that's okay. You can say his name a couple more times because I think that definitely helps people feel comfortable.
Here's a funny thing about it. People are okay with a scam as long as they're on the right side of the scam.
Well, sure. The early ones, right?
Right. Once it's the wrong side, it's, oh my God,
So curiously, as a financial advisor, obviously many people that are listening to this are interested in RV parks or they're looking to get into them. So what would you see as some financial planning advantages or drawbacks of owning an income generating piece of real estate like this?
First of all, it's always great to diversify your portfolio, whatever it is. You shouldn't have all your eggs in one basket. So my family owns a couple of condos. So we have real estate as well. So diversification is very, very important. That's all.
Yeah. So
that's part of your diversification. What percentage is your comfort level, your knowledge? So if you really know real estate, then the overwhelming majority of your money should be in real estate. Plain and simple. But there should be some money maybe set aside for equities or maybe even crypto or bonds But again, so that's really what's key.
Yeah, and some of those good sectors that you were talking about when we mentioned the savvy investors, some of these things like AI and quantum computing and things that in medicine that's forward facing, that's really going to be the future of them. So you've invested in some real estate, some condos and things like that. Why was that? Aside from just diversification, what were the specifics that made you want to diversify into real estate?
It really goes beyond me. Unfortunately, my late wife inherited money, and she bought the things as investments, as real estate investments. And they were income producing. And that's why we bought it.
So yeah, something that can spit out income and all of that. Did you have to
Yeah.
manage tenants with that?
Yes. One piece of real estate's in Washington, D.C. Now, at the time, my older daughter was going to medical school at George Washington University and was literally across the street. But when she graduated, she would rent it out, and we'd rent it to graduate students, law students, medical students.
Okay.
They all needed a place to live.
Yeah. That's a good tenant type of base, you would think.
And then we have another one in Wilmington, North Carolina, and actually the woman is paying below market rate. And the reason we're keeping it at that is she's a great tenant.
Yeah.
She pays on time. She gives us no problems. You want to hold on to her for dear life.
Yeah. And you don't want the problems because it's far away too. So it creates lots of issues when you open up that bag of worms for sure.
Right. So for us, it's a great investment. And the cash flow is great. We don't have to run after our money. It's been great cash flow. It's steady. It's real estate. That's the beauty of real estate. And then hopefully, it goes up in value. And at some point, you may want to sell it and realize a gain.
Yeah. Yeah. Heck yeah. I mean, it's always tracking with inflation, right? So it's a good hedge with that.
Absolutely.
Yeah. Yeah. And I mean, inflation is always going up. We know that, right? The Fed is saying they want to pin it at a certain thing, and it's higher than that right now, but it's always going up.
Inflation is never ending.
Yeah, exactly. Yeah.
Yeah. Look at the price of gas when I was a kid. I mean, when I was a kid, we'd get together. I'm talking about, high school, college. We'd all chip in 25 cents to buy 5 gallons of gas, 25 cents a gallon,
Nice.
and now I'm in California and it's, absurd. Yeah. Don't even go there. It's ridiculous.
Don't look at it. Don't tell me. Yeah. I remember when gas was 99 cents and yeah, good luck seeing anything like that.
Offset inflation and hopefully do better than inflation. So you're coming out ahead.
Yeah.
That's the thing. And
Yeah.
you don't get that with fixed income. Fixed income is just for cash flow, an alternative to maybe a money market or money in the bank. It's not meant to get rich. So that's different. But real estate is both cash flow and, to accumulate wealth.
Yeah. Heck yeah. Yeah, right. It's a little bit of and for all those things. And when you buy it right, you could get some equity right in the beginning too.
Well, that's why we said you have to do your homework.
Absolutely.
Yeah. Buffett tries to buy 50 cents on a dollar. And that's what you're looking for. And a lot of it comes with experience and comes with having a good team of experts who could tell you if it's worth it, so on and so forth. Buying, it's true in whatever it is. Buying right is always the key.
Yeah. And so it's having those right questions to asking all those questions of the key people so that you can really understand either you have the control of buying it right, or if you're investing in someone in a company that you make sure that they're buying it right and that they're operating it in that way as well.
That's why you have to do your due diligence and your homework.
Yeah.
You can't just do it. And I see it in my field. People will buy a stock because they heard it on the internet. They don't know anything about anything.
Right. Yeah. But and now that everyone's heard it, that's got to be the one to go and buy, right? No.
Right.
Probably not. When
no. Then it blows up
at that point.
Right.
Yeah.
Yeah. Someone's left holding the bag.
Yeah. Yeah. Exactly. I'm curious in your institution that we won't name, your financial advising institution. Do RV parks show up on your radar as a viable income producing asset?
Well, what we do have is REITs.
Okay. Yeah. Real estate
investment
trusts.
So that could be part of it. Absolutely. Absolutely. And you look at what is the, return on investment, the interest rate you're getting, and then what are the chances of it going up in value?
Mm-hmm.
So, yeah. So from that point of view, yeah, absolutely. Why not? It's just another investment vehicle.
Yeah.
And again, it's what are you trying to achieve? If you're looking for steady income, it's great. By all means, that should be part of your portfolio. I agree.
Yeah. Yeah, and it's just like you're saying, you got to have just a little bit of this and that. I know I talk with a lot of family offices, which are, big
Sure.
institutions that take lots of money and do things with them. You know what that is. I think I'm trying to explain it maybe a little bit for some of the listeners, but lots of money from families that are just
Mega
managing
wealth.
their wealth
Right. Like
over time.
Stephen A. Cohen, the owner of the
Y-
Met.
Yeah,
He has a family office.
yeah, yeah. And
Guys,
there's
$17 billion.
yes. Yeah, it's billions with a B easily that are managed by these things. And they just have certain allocation tranches. They need to put so much in real estate. They have different mandates that come out every year and they're like, "All right, this is how we're going to diversify. Real
Right.
estate this, crypto that, stocks
Right.
that."
In fact, Stephen A. Cohen now is getting permits to build a casino, you know, and a whole shopping center and the whole whatever. Yeah. So he's not just a one trick pony. And I agree.
Yeah, heck yeah. So, what would be I don't know. What are your top three things that you would tell a young investor right now that if they're scared of the market and they're unsure of what to do next? I mean, obviously we've talked about you got to understand their goals in the long run, but yeah, what would be those things that you would tell that investor?
Well, here's something I saw. It's funny. I was looking at Facebook and there was an ad from I don't know if it was Vanguard or what's called the Motley Fool, which is a website. And they said instead of looking for a needle in the haystack, why not buy the haystack?
Mm-hmm.
So one thing you could do, if you want to be in equities, you buy an index fund and put in money every month. Some months they'll be up, some months they'll be down. But over time, it's amazing how much money you'll make. And if you put away, they estimate if you put away $50 a month, you'll become a millionaire. And I've seen my own K. I've seen it happen. And here's an interesting exercise I saw. If you take a penny and double it every day for 30 days, it's astounding the amount of money you come away with.
I love that exercise. Yeah, that compounding interest exercise
And
is
Albert
insane.
Einstein said the most incredible thing in math is compound interest.
Yeah. Yeah. I love any of those time value of money equations. They're
But it's
phenomenal.
true, and it's true in your business.
Yeah.
You see it.
Yeah.
The old story. They're not making more real estate. It's
That's right. Yeah, this ground that we're sitting on, each of us right now, someone owns it, and so there's no one else owns it. That's it.
I mean, yeah. I mean, we bought our house in 1980s and it was $260,000. Nice house, okay, and it was I considered it expensive. All right, but it was less expensive than New York, believe it or not.
Yeah, well,
And I just had an appraisal, and it's $1.4 million. It's like wow,
it's phenomenal.
it is phenomenal.
Yeah. 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 Frankly, like my real estate portfolio that I had. So I've been a real estate investor for 2 decades now and bought a lot of homes. Long story short, when COVID hit and interest rates went down, of course, prices skyrocketed. A lot of my properties doubled in value in just those few years, which was phenomenal because, of course, I was already set on an interest rate and everything from before and tenants paying everything down from that mortgage. Yeah, it's phenomenal when it hits like that. When inflation goes through the roof and then prices and everything, like you're saying, they're not making any more of it. And affordable housing is an issue in the world. So
Absolutely.
it's just going to go up in price.
And rents are ridiculous.
Yeah.
I look at rents in New York. I mean, it's absurd. And
Yeah.
here's what's interesting about interest rates. When we bought our house, our first mortgage was 11 3/8%.
Yep.
And we refinanced
And
it.
people today would be like, "What are you talking about?" Right? Because they don't understand the
I
80s.
know. That's exactly. They don't understand. I was working prior to being in the financial industry. I was working as a sales manager. I had a girl who bought a house in New Jersey. Her first mortgage was 19%.
Man.
I mean, can you imagine that?
I mean, so that seems insane. I will say that right now, we're developing the most technologically advanced RV and glamping destination in the world, and it's a development project, and we're paying our investors 17%,
Wow.
who've invested, annually since it's this first stage of it, and giving them perks on top, and we're fine because we understand where we're bought it at and where it's moving towards. That's fine. But to pay that, you're going like, wow, right? That seems crazy. But for us, it's the short term, the bridge amount of debt that we have. It's the name of the game. We know that we're going to go through this growth and then we're going to refinance and put it on a real lower interest rate in the future. But right now, our investors can benefit from these high interest rates.
How long are they locked in at 17%?
So 1 to 2 years. So it's locked at that for a shorter time. It's secured by a 506B or a C type of securities document. And we also have a promissory note and a deed of trust, a mortgage for everyone individually, because we bought a whole HOA. I always tell people, you have condos, I apologize, it might offend. Never buy something in an HOA because you lose control.
I agree. No, I would never buy. Absolutely. No.
Unless you buy the HOA and own the HOA. That's the thing.
I agree. I don't want someone telling me what color I have to paint my door.
No, or when I can do something, or none of that.
No,
I don't need a committee to pick the color of my house.
Right, and I don't need someone who's involved in the ego for politics and
right.
No, and we don't live in an HOA community, and I never would for that reason.
Yeah. So
where is this, if I may ask, this property located?
Yeah, it's in North Carolina, east of Raleigh, and it's right on the coast. So it's a saltwater beach. It happens to be like on the western side because I like sunsets a little bit more. But yeah, we've got a saltwater beach there, lazy river, and Beaufort is the name of the town. It's a big, like, trophy fishing type of area. So
I wonder how far it is from Wilmington.
Yeah, so northeast from Wilmington, maybe an hour and a half. I Google my way to the store, so I would have to put it into the GPS.
Okay.
So
you're not living here now, are you?
No, not yet. So my family and I, we've always wanted to live in multiple places throughout the year. And so what a wonderful way, owning a bunch of different RV parks. We get to enjoy them. I get to teach my 2 little boys nature and finance and talking to people and having a good time and being disconnected from technology while we can then step in and be connected technology. But that balance, because my best memories were growing up. We'd go to an island every year, canoe to an island every year, and we'd camp. And we're just like families playing games, I can literally, everyone remembers their memories. They don't tend to remember the things they buy as much, but they remember these experiences, these memories that are made, these trips, these vacations. And so that's what I'm realizing, that's what we're selling, is we're selling vacations and memories. And so we really want to cater to that. And so we're doing everything to make it the best, the most memorable, and we're really excited for all of that.
I think that's really excellent. And again, teaching your kids about investing, I think, is key.
Love it. Yes. Yeah. We're going to homeschool, and that will be our playground, our homeschool, our workout area, just outdoors and in nature among people. Yeah. Real excited. So awesome. Man, what an episode. I tell you, big thanks again to our guest.
No, it's my pleasure.
Yeah, Bob, we'll call you. I appreciate you so much, man, for breaking all these things down.
Thank you. And I only wish you success in what you do. And I'm sure you'll be very successful. You seem like a very successful, hard-working, driven individual, smart. That's good. Good for you. I love to see people succeed.
Yeah, I appreciate that. I really appreciate you saying that, and that mentality too. That's a very giving. It's an abundant type of mentality. Yeah, I only wish good things for everyone around me.
I want.
Yes. Yeah. Sweet. So
okay.
yeah. So I guess if there's one takeaway from today, it's this: you don't have to follow the herd into chaos. That's what Bob is teaching us. With the right information, the right community, the right mindset, you can create your own economy. Don't just do what the masses do. And in fact, that might be the time to go the opposite direction. And at least consider your options. Talk to someone like Bob, a trusted financial advisor, someone that can guide you on your path to do whatever you need to do, and have those dreams, achieve your goals, right? So if these topics interest you and you want to learn more, stay in touch. Look in the show notes to get on our newsletter, become an official Invest In Insider to continue your journey with us. And if you want to chat with me directly about investments, learn how you can invest in this awesome asset class of RV parks, you'll see me, my little boys, my family doing all that fun. You can see a link in the show notes to schedule a one-on-one discovery call with me and Maverick Asher Capital. So until next time on the Invest In podcast, keep your mind strong, your income passive, and your RVs parked on a cash-flowing land. Thank you, everyone.
Thank you.
That's a wrap for this episode of the Invest In podcast. We hope you gained valuable insights to fuel your investment journey.
If you found this episode helpful, don't keep it to yourself. Subscribe, rate, and review the show on Apple Podcasts and Spotify. Your support helps us bring more insider knowledge from the top real estate and investment minds.
And if you're ready to take your investments to the next level, follow us on social media at Go Invest In on Instagram, LinkedIn, X, TikTok, Facebook, YouTube, and everywhere for more expert tips, behind-the-scenes content, and exclusive updates.
Thanks for tuning in. And until next time, keep investing, keep building, and we'll see you on the road.